So if you're a home buyer in 2024, is there any good news out there for you? Well, that's what we're going to talk about today, a little bit later in this video. And then at the end of the video, I'll give you all my information if you guys would like to reach out to me to maybe check and see, you're locked in and your rate's 8%. Can we get you a lower rate? Or can you even get qualified in today's market? But without further ado, let's get over to my daily report so I can update you guys on what in the heck's going on with real estate. So the first thing we do on a daily basis is we go over where mortgage rates are. So these are the top 6 products people use when they're buying their first house. These are not my rates. These are not any individual bank's rates. What this is Mortgage News Daily. They do a fantastic job at this. They survey lenders all over the country and they ask them these 5 questions. These 5 questions. 3 of these questions might even match up to you. So what they are is, this is from a person buying their first house. It's going to be their primary home, and it's a single family home. That might be you. You're buying your first house. It's a single family home. You're going to live in there. So you might say, well, Dan, there's my rate. Well, there's more to this equation. The other 2 is, they have a 740 credit score and they're putting down 20%. So if you're in that category, God bless you, that's probably what your rates are going to be. Most people don't have a 740 credit score and they're not putting down 20%. So if that's not you, if that's you, you're not putting down all that stuff. What's your rate? I'm going to give you my information at the end of this video so you can reach out to me to figure that out. Okay, so without further ado, I want to give you some context. If you're a home buyer in 2024, what can you expect? You've been sitting on the sidelines waiting for that crash to occur. What happened? Well, mortgage rates hit 8%. And what happened? Home prices actually picked up steam. Okay, that's the bad news that people are facing. So if you've been sitting on the sidelines for the last 2-3 years, waiting for the housing market to crash, you're only watching it go up and up and up. Okay, so that's actually the bad news. And it's going to continue into 2024. And the reason being is this. There's no supply, folks. There is just no supply. We can't get supply the only place we can get supply is from the builders. We're not getting it from existing homeowners because the rates are still too high to push more and more existing homeowners to push them to put their house on the market and maybe upsize or downsize. So you don't have that. Okay. And then the next thing is you don't have foreclosures. A lot of people are saying that foreclosures are going to run rampant. Well, they've been saying that for 2 years and they haven't. Reason being is people have equity in their homes. Okay. So you don't have the existing homeowner putting their house on the market. You don't have foreclosures coming to market, and the builders are way behind the 8 ball on this. And most of the builders, I did a survey on this last week. Most of the builders right now, they're decreasing the amount of homes they're building for single family homes, like things that you and I build or live in. They're actually increasing their building on 5+ units, meaning apartment buildings, condo complexes, things like that. It's not single family homes. So we're not going to have that abundant housing flood come to the market. Now, the next thing is we've been hearing that the Federal Reserve is probably going to lower rates. Well, they are going to lower rates. How far, how much, we don't know. But what you're most likely going to see is rates coming into about 5.5% to 6% in 2024. If 8% wasn't enough to actually stop this housing price increase, what do you think is going to happen when rates go back down to 5.5% or 6%? You're going to have a flood of people back into the market, and you're going to have FOMO once again, and you're not going to see a housing crash. So if you're out there, you're thinking there's going to be a housing crash, God bless you, sit on the sidelines and wait for it. But I think you're going to be waiting a long time. So that's the bad news for potential home buyers in 2024. But what are you going to do? We'd love to help you navigate this market, but that's the bad news and actually the good news for some. Okay, so without further ado, let's get over to the economic data that we have for today to see how this is going to play a role in the financial markets as well as mortgage rates. So we basically don't have much information out there today. You have manufacturing PMI came basically right in line to where it was. You have manufacturing prices. That's actually cooling off quite a bit right through here. So prices on the manufacturing level are starting to come down. That's going to help inflation. Then we have the JOLT index. The JOLT index is basically telling us how many job openings there are and how many people are transferring jobs. Okay, this number was 11 million not too long ago. That means there was tons of job openings. Well, that puts the employers at a disadvantage because there's so many openings. They got to do all kind of things to incur or attract people to their jobs. So they're giving more money, more incentives, and things like that. When they do that, what happens to the prices? prices go up, aka inflation. So that's what we've been seeing. So you're going to start seeing wage inflation starting to come down, as well as inflation on the producer side of the equation also coming down. So the other news we have out today is the Federal Reserve. They're coming out with their minutes. So what happens, the Federal Reserve meets about every 6 weeks. They hold a meeting, they come out and they tell us exactly what they're going to do. And then about 2-3 weeks after that, they come out and they publish their meetings, their minutes. So we're going to dissect that later today, and all analysts are going to do this to see what exactly they talked about behind the closed doors. So that might play a role in what's happening today in the economic sphere as well as the markets. So without further ado, let's get over to it. Here's some confusing information that I had today. Okay, so I go through CNBC, see how the markets are reacting to the news and so forth. But here's the intriguing part. Look right through here. Federal Reserve's person, the person that sits on the Federal Reserve, his name is Barkin. Okay, he's one of many members. He sees likely that we're going to have a soft landing, but rate hikes still a possibility. So I think what happened is the Federal Reserve, when they came out at after the last meeting and said, well, we're going to most likely start reducing interest rates, the market instantaneously went up 500 points. The Dow Jones, 500 points automatically. You saw mortgage rates plummet. It went from 8% to in the 6s, basically within 48 hours, the biggest drop ever in history. So the Federal Reserve, I think, kind of met behind closed doors and says, guys, we can't keep telling people this. We can't unveil our cards. We know that the inflation is down, but we can't go out there and say it and we're going to pivot and start reducing rates because the markets are going to go crazy. People are going to feel wealthy again. Stock market goes up. You know, your 401ks go up and everything. People won't be starting to pull back on their purchasing. Thus, inflation's going to keep going up. Okay, but here's the intriguing part. Then on the other side of this equation, look right here. The Fed is expected to cut interest rates in 2024. So what is it? Are they going to increase rates or are they going to cut rates? We don't know, nor do they know. And then you go over here, how the Federal Reserve's minutes could shake up investors' rate cuts expectations. So here's my thoughts on all this. Federal Reserve is going to cut rates. Okay, even them as the members said they're going to cut rates. But once inflation gets back in the 2s, and it might even hit, the mid 2s, the Federal Reserve has no reason to hold rates as high as they are. Plus, it's affecting national debt. Okay, the government is $33 trillion in debt. So as the Federal Reserve increases rates, the interest on that debt keeps increasing as well. Then they also know there's a big corporate bond bubble out there, that all these rate increases are affecting almost every corporation out there as well. So they're going to be forced at some point to say, okay, inflation's in check. We got to start reducing rates. So that's what you're most likely going to see in 2024. So based on this news, what in the world's going on in the markets? Well, I don't know, because I just went over the news with you, and the market doesn't like something about this. What I think it is, and I've been telling people this right before the holidays, I said, you guys got to sit still for the next 2 to 3 weeks, because there's going to be limited trading on Wall Street. So every trade is going to be, compounded. So what you're seeing right now, you just saw that. It went from 31 to 22. The markets are all over the place. But what I want you to understand on this page, if you're new to the channel, how do we follow mortgage rates? We used to follow it by the 10-year Treasury, because what you would do is you take the 10-year Treasury yield right there, 4.0, you'd add 1.5 to 1.7 to it, and that would be the mortgage rates. So you'd have a mortgage rate at, at this case, 5.5 to 5.7. Where are they? Well, they're at 6.7. Okay, so there's a huge disconnect there. All right, so that's why we don't follow the 10-year Treasury anymore, because the spread right now is about 2.5%, almost teetering at 3%. That's uncommon for throughout history. What we follow is right here, the mortgage-backed security. This bond right here is a mortgage bond that trades on Wall Street. Its yield is the biggest component of your rate. That's how you monitor mortgage rates. So what you're watching right here is the price of the bond is right here, and this is the effect. What's going on with it? All you need to know is this: if the price of the bond goes down, rates are going up. Okay, but what we've seen over the last 60 days, the prices went from here in 96 all the way up to here, 101. That's up, means rates are coming down. So that's where we saw rates going from 8% to about 6.7% right up through there. So that's that news for today. But if you're out there and you're like, hey, Dan, okay, I locked in my rate. What can I do? Okay, am I stuck? Well, you might be stuck with that lender, but we might be able to help you. If you're 30 days or more away from closing, we'd love to help you. Okay, what I need you to do is upload your loan estimate right in here. We're going to compare your loan estimate to what market rates are right now and fees, and get back with you pretty much within a couple hours to let you know, can we get you a lower rate? lower fees, or all the above, lower rate and lower fees. But if you're out there and like, Dan, how do I see if I can even qualify in today's market with the prices of houses the way they are, interest rates the way they are? I don't know if I make enough money. I don't know if I have enough money in down payment. I don't even know if my credit's good enough. How do I qualify? So what I ask you to do is don't disqualify yourself. Reach out to us. This is what we're here for. We'd love to help you. You can do that 3 ways. One, you can click the Apply Now button. It's kind of unique. It doesn't send you to an application system. It actually asks you a few questions and then sets you up with a consultation with one of our mortgage advisors that specializes in the mortgage that you're looking for. Or what you could do is when you're at the rateupdate.com, you feel free to give us a call or shoot me an email. Where you find that data, as you scroll down, you're going to go through blogs, other tutorials, mortgage calculators, and then at the bottom what you're going to see is our 800 number as well as my email address, and it's right there. Love to hear from you, love to talk to you, or even schedule an appointment with you to go over your financials or your scenario to see, can you buy a house in 2024? That's what we'll help you to do if that's what you're looking to do and want to do. So that's it for my video for today. We do have a live event coming up later this afternoon, so please check that out, where we sit there and people ask questions for about an hour and we answer those questions, and most of them are really intriguing. I hope you can join us at that time and might even answer the question that you have. So take care, God bless, hope to see you at today's live event. Bye-bye.